All right, so let's talk about dividend growth investing for specifically retirees. Although we're not going to leave out everybody.
Yeah,
but we kind of want to look through the lens of the retiree, when it comes to gaining access to income on their investments. Because, at the end of the day,
that's the biggest question they have.
Why do we invest? Ultimately, so we can retire someday.
I've saved. I have this pot of money. Now, how do I generate income from it?
Yeah. So the biggest issue, the challenge that we come across all the time is that very thing. Like, how do I turn this pot of money into income?
Yep.
In years past, as your progression of investing, advising has grown, what's the best way to do that? It's a challenge. We have a very methodical way of doing it these days, but back in the day,
there are a ton of philosophies around how to do that too.
There's a lot, but it really boils down to two. It's either a growth mindset or an income mindset.
Right.
And I don't care your age. We are always income minded. How do we build cash flow to your bank account, whether you're 20 or 80?
That's right.
All right. So let's talk about why dividend growth investing works for retirees.
Well, first and foremost, it's a reliable income stream.
Yep.
We will never use guaranteed whenever we talk about dividends.
Never.
But if you're smart in how you choose the companies that you invest in and you monitor them, it can be one of the most predictable sources of income that you can find out there from Wall Street, from the market.
And another thing is inflation protection. At the end of the day, that's a big fear. That has been more of a fear recently. It always hasn't been a fear. There's a stretch of 7 years or so where nobody even uttered the word inflation,
right?
And then over the last couple of years, everybody's like, man, inflation stinks. This is terrible. So inflation is one of those things that very seldom is a good thing. Deflation, but you can argue so many things against deflation.
Yep.
You can argue inflation can be a good thing.
Whenever it's like catching people off guard.
Yeah, by 50% in a given year.
Correct. Yes. Yeah. Yep. When you have those big spikes, it's hard to really grasp with it. But whenever it's in that steady kind of increase, your wages are increasing, the cost of goods are increasing.
Yep.
Like everything kind of seems in unison.
Yeah. So inflation protection for dividend stocks is great because of the dividend growth aspect. And we've had lots of shows about dividend growth.
Yep.
And that's what we're talking about here, that you're getting a strong dividend and then they increase that dividend and there's the volatility of the stock, so that impact of that increased dividend can be better or worse depending on the price of that stock.
Yep.
And then there's also market downturn resilience. And what I'll say about that is market downturns, market panic, wealth destruction it is not created by market downturns. Like market volatility, decreased price exposure, that doesn't destroy wealth. Panic does.
Mm-hmm.
When you act on panic, when you're like, hey, this stock has done X, I'm going to do Y because I don't like it. A lot of times those decisions are the bane, the root of wealth destruction. And, the hard part as a retiree is, I said this so many times in the past, you can't live on income that you don't have,
Yeah.
And if you are a dividend investor, the only way you don't get paid is if you sell.
That's right.
I shouldn't say only way, because they can cut their dividend. I understand that. There's a lot of things that can happen.
Yeah. But the most likely scenario.
The most likely for an investor
yes.
is that you sell. Because if you've got a bunch of stocks and one company doesn't pay their dividend or a few companies don't pay their dividend, that's obviously there has to be legitimate reasons behind that. But at the end of the day, the biggest is investor decisions, advisor decisions on the portfolio. And there are so many things out there that we can't predict.
That's right.
But at the end of the day, the biggest one that destroys wealth and income is panic.
Yep.
And
that's why most people that are pre-retirement, like, I say pre-retirement in that like window of 5 less years and they know they're going to retire, or even early on in retirement.
Yeah.
They're like, all right, we're just starting to like live on this dividend income or whatever source of income. That's why they refer to it as the fragile years, right?
Yep.
We've had people come into our office and they're like, I'm just, I'm really in these fragile years right now as I approach retirement.
It's the transition
why?
years.
And it's the mental they feel like, all right, I've saved up to this. How do I protect it?
Yeah.
Because we can't have one of those downturns where this gets cut by 30%.
And I'd also say during that transition period, I've so many times, I'll actually, I'm not going to reference who the client is, but years and years and years ago, I remember a client that, this is way back when I was in Michigan, that really struggled with that transition. You know, you're calling it the fragile years, but it's really that transition of going from working for a living to living off of your investments. And that is a tough transition. And what happens there is you go from a lifetime, a career of adding.
Yeah. You've been adding for 40, 50 years.
Yeah. And that's a tough thing when you hit retirement and you're like, okay, now I'm going to spend. And that psychologically, that is a hard thing to go through because you're like, well, what's going to happen to my nest egg if I stop adding to it? I'm just going to spend it all. And I've never retired. You've never retired. Yet I've done the act of retiring with my clients, you know, hundreds, probably thousands of times over my career. So my expectation understanding is super strong because I've seen it so many times in so many different ways. And I have so many different clients, you know, hundreds of clients that are living off of their dividend. And the thing I think is really important to talk to here is really for the retiree is understanding it's okay to not reinvest. Mm-hmm. It is okay to not add. Depending on how your simplicity plan is, you know, there's so much planning that needs to happen. But there are so many situations that you can find yourself in where you understand your need, you understand your planning, and if the math works, there's so many scenarios where it's fine to not reinvest and to live off of some or all of your dividend. Like I have more clients than I can count that are living on 100% of the dividend without the fear of running out of money. And I have a lot of clients that live in fear of running out, even though they're not. And I have clients that have no idea, but panic is a good option, you know? And it's tough to walk somebody through because I'm just the advisor. I'm just the guy that's been there, done that. I haven't had to live it in my own life. So there is some sort of limitation. I am just a guide and a coach, but it's ultimately their life to live. It's ultimately, you know, their panic to have and overcome. And I'm just kind of the sounding board. Some retirees handle that way better than others. Others really struggle with it.
Well, and that's really the thought process and the reason why we wanted to do this show is to let you know, like, you're not alone. What you're feeling is real. Yeah. And there's other people that are in varying degrees of the exact same emotions that you are, but they're just that. They're emotions. We always say, come back to the real numbers. Like, sit down, do your simplicity plan. Make sure that the numbers are working out. Most plans, when you do that, like, there's a reason why you've been planning this way. And it's so that you can live the retirement that you want. And I think that's a big thing to remember as well. There was a reason why you were bringing in all of your income, and you were saving some of that and putting it away in a 401k or in a retirement account. It was so that you could have these days now to go spend and to enjoy retirement. So try to have a little bit of freedom in that this was the whole reason why you were putting that money away.
And the more time that your portfolio has had to build that, the more confidence you should have going into that. But that's not always the case. This transition that we're talking about, it's a real thing. It's a hard thing to deal with.
Well, there's a lot of our clients, like, that's how we're getting introduced to them, is they're at the retirement. They haven't been investing in dividends for 4 or 5 years where they get to see those statements of had a down year, up year, and they see the consistency. So they're just having to kind of take our word for it, or whoever their advisor is. Mm-hmm. So we get it.
I've got clients that, have been investing so long and doing it for so many years, 15 years. And, I've got clients that'll tell me, like, I'm making more money now than I've ever made working with my dividend income and stuff. Yet I can still see the panic in their eyes. Like, I'm so thankful that I get to reinvest. And I see other people that, have been retired for 5 years, living on 100% of their dividend. And they're like, I love my life.
Mhm.
You know, I got all the time in the world to golf, and I've got purpose in my life and meaning in the, like, so thankful. I'm so thankful, you know, that I have my money invested the way I do, that I don't have to worry of where my next check's coming from, and they're keeping up with inflation. They see the reliability in the face of volatility.
That's right.
You know, and they're like, this is such a good retirement mentality. And some of those people came to us on the threshold of retirement, invested in the portfolio and turned on their income. And they're living their dream. And then we got other clients that have been investing for 10 years. They have this track record of like amazingness in dividend growth and income. And then they hit retirement and they're panicked, you know, like, can I actually stop reinvesting?
Yeah.
And the answer is, you know, let's look at the plan.
Yes.
Make sure all the numbers are working. But a lot of time, I mean, 90%, 95% of the time, it's fine.
If we've gotten to that point where you're asking and just looking for confirmation, then the
answer is yes.
Yeah, usually yes.
Yeah. And on the flip side, of that, when you don't want to just live on your income, and I'll call it a game, you want to play the game of when you should take, you know, cash or don't take dividends the way they were designed. That's a game we don't play. Like, I don't want to get involved in that. That's not how dividends are effective. Now it's a market timing thing. Like, when's the appropriate time to take it? You're guessing or betting that the portfolio is really going to go down, because if the portfolio goes up over that next year, you're investing at a loss because the share price went up. And now you're going to be behind. You're going to actually have less income the next year, even though you're like, how did this not work? So you really need the portfolio to go down, reinvesting whatever that mix is. Like, that's a complicated game.
Yeah.
That I'm like, I'm out. If you want to do that, you can do that. But I don't like the logic. I don't like the math
from
behind it.
Management side, that's it.
I think it's a dangerous game to play. Yeah. I think the best bet is to let the companies. We do our best job to have the right companies that are going to increase their dividend on their own and do that. And we've got dozens and dozens of clients that struggle with this. Mm-hmm. And this is not abnormal. Like, it's a real thing. And the real thing is not actually the strategy. It's not, should I take the dividend or should I reinvest? The struggle is transitioning from saving to spending. Yeah. And that's hard. And that's where some people just don't want to let go.
Yeah. Well, especially if you've always been a saver.
Yeah.
Like, that's my wife. She's a saver.
Yeah.
And she will be in this exact same scenario.
But my wife will be too.
Because she's like, wait, now we can spend. And it's like, yes, but we're not saving anything. And it's like, well,
how can it work if I don't save? I'm going to run out. Well, dividends don't spend principal.
Right.
As long as
everyone's done their job correctly leading up to, Lord willing, you're in a scenario where you're not having to take from principal. You're just spending the dividends that are paid out. And therefore it doesn't matter as much what happens to the value. It can ride the wave.
So let's jump to, like, what are some other big concerns here? So, you know, you have that transition concern. Yes, that's a legitimate concern. I get it. But there's also the legitimate concern of, what if it isn't enough?
Yeah. And now I have to spend a little principal.
Yeah.
Or I have to change my lifestyle.
What do you do in that scenario? Because you've got the psychological one of this transition period from saving to spending. And we kept saying, assuming everything works out, but let's assume it doesn't. So let's just say you have a lifestyle want of 100,000, but your dividend, Social Security, everything only generates 80. What do you do in that scenario?
Those are the not so fun conversations that you get to have as an advisor, where really we just become truth tellers, and you're saying you want to live on 100, but your assets are only saying that we can safely do 80. Mm-hmm. Then the conversation is, all right, where's the extra going to come from? Or are you going to reduce your expectation of retirement, at least for a time? You know, so there's a lot of variables that come in to that.
So let's land this plane. Yeah. So really what the call to action here is, if at the end of the day, you find yourself in this situation of you're fearing, you're struggling with this transition, or you're not sure that your lifestyle want is matching your actual income from your portfolios, the first thing that you need to do is just go back to your plan. For our clients, it's their simplicity plan. If you're not a client of ours, you have to have some sort of income plan to understand what you have, what you want, and if your strategy is going to fulfill that. Like, what's your shortfall? What's the gap between what you want and what you have? And it's really starting there and making sure you have a robust understanding and knowledge of what you have, what you want, and ultimately what can be generated from your investments. For us, it's a dividend solution. Not 100% of the time, but a lot of times. But at the end of the day, it's understanding the math behind that. Then once you get the story and you have this robust understanding and plan, then it comes down to just dealing with the psychological demons in your own head and figuring out ways to just overcome whatever's holding you back or holding you down that you're struggling with, because math is math.
Yep.
Like, if the numbers work, it's just a fear.
That's it.
It's a panic. But you're like, after, years, you're like, can't believe I ever fear with that. And I've told the story here, and I'll stop talking after this, but I can remember very vividly a client in my office years ago really panicked, and I've had a lot of these, so you won't know which one it is. But, at the end of the day, I had somebody in my office crying, fearing retirement. Like, they saved a ton of money and just literally weeping out of fear and panic. And like, I'm going to run out of money. I haven't saved enough. And yet we're doing simplicity, and they're like, there's no reason to fear. Like, you've saved, good job,
Right?
like rah. And then here we are years and years later, where we'll have conversations, during our meetings about how much they've grown. And I love having this conversation because I have a lot of these clients that were crying, weeping, and here they are confident they're not going to run out of money. And it's years later, and like, they're like, I'm almost embarrassed, of where I was, and a lot of times it's me shedding that light. Like, look how much you've grown. Like, you'll breathe life into clients. Like, I can get a fearful retiree on the phone with you who you were in their shoes, crying, weeping, and here you are confident going, you can retire. Like, your plan looks good. You have to overcome your fear just like I did. And here you are, you're a cheerleader, yet you were one on the side of the bench, afraid to swing the bat.
That's it.
Like, don't put me in the game. I'm going to be terrible. And now you're like, I'm in the game, and it's so fun to see
bring
that
them
growth.
along.
Yes.
Yeah.
So
That's how I would leave it. If you find yourself still feeling uncertain, nervous, any type of fear, I know for a fact we have a whole host of clients who would be more than happy to have a conversation with you, go grab coffee, and just share their experience. Doesn't even have to be about dollars. It can just be about the emotion.
This is not about coming to work with us. This is about you dealing with your fear.
Yeah, that was strictly an emotional connection that you can have. Just that, because we've said it over and over for this show, it's a mental shift.
Yeah.
And if we can do anything to help with you as you transition from working to retirement to help the mental side, we're all for it.
Yeah.
So
this is a fun discussion. So hope you enjoyed yourself and learned a little bit today.